Hello, and a massive hello to everybody. Hope everybody's having a great day, great weekend, wherever you may be, whatever you may be doing. 50 pips rocking and rolling here, 3rd of December 2017. No trade calls, no recommendations. Everybody responsible for their stuff. We're here for educational purposes only. So, what's happening? Interesting week on the data front. I mean, we do have we got construction PMIs starting the week on Monday out of the UK. Then on Tuesday, we've got a bunch of NZD data, we've got RBA rate statement, we've got some China data, we've got a trade balance out of Canada, we've got another GDT price index auction out of New Zealand on Wednesday, we've got GDP out of Australia, we got a BOC rate statement, which should be interesting. On Thursday, we got the useless, that's a bit of a slip, the usual weekly jobs numbers, we've got Draghi speaking, and then on Friday, the little cherry on top of the cake, basically, we've got non-farm payrolls, right? So we'll have to see what happens there. Most likely, the news flow is really going to be dominated by Washington, D.C., right? Flynn, Trump, et cetera, things could be heating up with North Korea with those tests, with those drills they did, or military exercises. Now North Korea is probably going to respond, or at least we'll see some news on the wire. So things could be very, very volatile this week. At least the VIX is moving, right? At the very least, the VIX is moving. I think the most depressing thing that could happen into year end is that this little taste of volatility, 1, 2, 3, 4 days we had, right, in a row, this little test of volatility with this peak back into the 1450 dies down. We get a kind of a whack-a-mole scenario, and then we get something like this for the rest of the year, right? I very much doubt that's going to be the case, right? I'd expect it to be more like we've witnessed recently, but so let's hope it is, because at least, we need volatility to keep things interesting and to give us opportunities. So we'll have to see what's going on here. Not much has changed on the VIX. As we've been talking about this for a long time, all the players shorting VIX aggressively, especially the institutional side, they're just shorting more into the bounces, right? Unless we get a day where the VIX is up like, 70, 80, 90%, then it could get hairy. Unless we get something like that, then most likely you'll just still see aggressive selling, right? So in terms of equities, it's going to be interesting to see what's going to happen. It's very difficult to make a call now, especially after the news we've had. So apparently the ABC broke the news on Flynn on Friday. Now over the weekend, they've retracted the article. So again, Trump's been tweeting. Apparently his tweets were, not so wise. Then apparently his lawyer wrote them for him. We just don't know. So bottom line is it's going to be volatile. I think to keep things simple on the ES is basically chances are we'll gap up tonight and try and rip those highs as long as we hold bid. Just look at round numbers. I mean, you can find all kinds of tactical targets to the upside, but when you've got this kind of this overnight melt up, or this, this big squeeze, I just look at round numbers to the upside. To the downside, unless we get some trading below the 2600 and some selling below that, unless the market can attract sellers on a break below the 2600 instead of more buy the dip, right, then it's going to be more of the same. The key is if we find new sellers on a break of the 2600, then it gets interesting. Unless you see that in a close below, chances are it's still going to be sideways chop to grind higher into the end of the year. But at least we've seen last week things could get interesting. Now, again, with this news, you'd expect what's most affected. You probably expect to see yen trying to gap up about 100 into the open. You'd probably expect euro and the others not to be too affected. Probably yen is going to be where you'll see most wheeling and dealing. It's all going to be about follow through, right? The other, in terms of indices, what we've been talking about, what we think is far more interesting than the ES, right, is being the NASDAQ, right? Simply because we've seen a lot of selling on the NASDAQ and unable to attract new buyers at highs, and you saw that in all the tech names. But again, here we also got the general buy the dip after the news on Friday. So we'll have to see what happens. But we still think that if you're trying to look for shorts, the NASDAQ makes an awful lot more sense than the ES as it looks weaker. But again, going into the week, essentially what you've got to deal with now on everything is last week's highs and last week's lows, right? As long as we stay inside there, it's what we call velocity of move inside range. So it doesn't necessarily mean anything, and it can move particularly quickly, but it won't mean a lot. If we close daily closes above or below, then we expect to see follow through. That's the simplest way to look at it, okay? So looking at some other charts, some other things which may or may not be interesting. I mean, in terms of dollar index, and that's the big question, right? The big question, the big fight essentially is on, and I think you can, since a lot of the charts are in sideways ranges, you can pretty much interpret them whichever way you want, depending what your bias is. And here, you know, you'll have the crowd saying, okay, well, we've got equities up into the end of the year, dollars going to rally. That means yen up, euro down, gold down, right? And the other people saying, no, we're going to see a correction here. This doesn't make sense. Dollar's going to break down. Gold's going to rip. Euro's going to rip. Yen is going to puke. And equities are going to puke. And you can pretty much, you know, play the charts whichever way you want. I mean, in terms of the way we're looking at it, what we said here on the dollar index is there's a lot of chop, similar to what we discussed on equities. You know, last week's highs and last week's lows. As long as we stay inside there, much to do about nothing. And here, you know, there's still a lot of overhead resistance. So if on this open tonight, the dollar gets bid, for us, nothing changes unless we see a daily close above the 50 DMA, right? If we see a daily close above the 50 DMA, then the move can have some legs, right? In terms of the downside, if we sell down this week, unless we get a daily close below last week's lows, we're going to look at it as velocity of move inside range, not a lot to do. If we get a close below last week's lows, then we think chances are sharp acceleration lower. That's the way we're going to look at it. And you can see it on a lot of charts. You can look at something like the Aussie weekly, right? It's an interesting chart. You see how a lot of people are saying this has to die, this has to die, this has to die. Well, not so fast, right? You've still got these two moving averages. It's stuck here. You're getting a lot of chop, but they're still trying to hold. So this is another interesting one on the week here. Day close below this 100 on the weekly. Very, very heavy potential, sharp acceleration lower. We get a daily close this week above the 7700, then we think sharp acceleration to test that 200 and possibly higher. So it's a fairly similar scenario across the board. One chart which is particularly interesting is crude, right? Because technically, if you see the way this is trading, it looks like it's really trying to hold and make a base here at the 200 on the weekly to rally up and try and take out those 65s. So I think short term, if you're looking at this, any holds above this 200 on the weekly, it looks like it's going to try and take some stops out and go to the upside and take out those 65s. Okay, and if we get any move back below the 200, then we could see a little bit of a correction. As far as we're concerned, our stance hasn't changed on crude for a long time, right? As far as we're concerned, anyway, up into those highs, we'd expect to see a lot of sell interest coming in, and anyway back into these lows, we expect to see a lot of buy interest with, you know, pretty much all the, you know, OPEC kind of caught between a rock and a hard place, simply because, you know, shale is going to be very, very happy as we continue to ramp higher, and you know, one way or the other, it's going to add some pressure on crude here, and any puke lower, right? That just means that they're going to start to jawbone it, et cetera, et cetera, et cetera, and they'll start to set some upside pressure. So it's really stuck. I think if you had to say something, it looks like it's trying to coil for a break higher, but we would be far more partial to looking for attempts higher and failures to try and get short for a retest lower. But for now, it's still fairly choppy, not too interesting where it is here, but probably one of the most interesting charts on the week, looking for possible trades to set up. Another thing which we've been talking about a lot is interesting is on the on the equities, right? A lot of people be saying, "Oh, we've got Nikkei is ramping up, and it's going to start to explode to new highs." And of course, maybe that's could very very well be. The only thing, actually, we had the another chart marked up. Let's see if I can find it. It would help if I spell it properly, right? So I think it's this one we had charts marked up. There you go. So again, here the way we would focus on the Nikkei is we expect this to be a very, very, very strong wall, right? Now, if this goes and we see market trade above here, then this could be one ugly squeeze, but we still, our base case going into the week is that it's going to take something very, very, very fundamental to squeeze through all this area here. We expect to see a lot of offers here. So if anything, we look at this as a selling opportunity inside that zone. And, you know, if you look at DAX and FTSE, DAX held very, very heavy. This is a very key test going to next week. Now, it's probably going to try and bounce if everything bounces today. But on any close next week below this 12,861s, we expect this to start to trade very, very heavy. It's really important for the bulls to hold this. If they can't hold this, we'd expect this to accelerate lower very, very aggressively. And the other one to keep an eye out for also is, if you look at the FTSE, is also very, very ugly break here, right? We're looking for this failure to give us some move back into 7354s. And here on the close below, any rally back into that level that can't hold, we expect this to accelerate much lower. So I think these are interesting charts to keep an eye out for this week. Euro, no big change to what we've been discussing. We've been discussing in detail. It's still stuck in this zone. I just suggest you go back to some of the previous videos because we've looked at it in an awful lot of detail. But unless we get a daily close below this zone, we still think that ultimately it's trying to break higher. And on the weekly, that's pretty much the chart. The chart is on the blog. And what else have we got that could be interesting? Gold, a lot of wheeling and dealing with not a lot changing, right? We said that ultimately we still feel that this is trying to break higher. There's an awful lot of chop. We would not be surprised if it comes back down to try and clip all these stops from an intraday basis. But unless we don't get a daily close below the 200 and the bids still appear in this zone, we still think it's trying to attempt a rotation higher. Again, a lot is going to depend on the news out of Washington this week. We'll have to see. What happens. And, you know, that's pretty much where we stand. Actually, Kiwi is an interesting one on a weekly, also still going into that dollar theme, right? We had this big chop zone, and you see how it's just hovering at these lows, right, ahead of the 6800. Now, talk about this level putting up a good fight. You know, and you know, we'll have to see the way the dollar breaks this week. But if this lets go, if it gets daily closes below, this could get very heavy very, very quickly. But as long as, despite the fact that the more level is tested, the weaker it becomes, as long as it holds, it holds. So watch out on a possible aggressive reversal, because if it starts to catch a little bit of a bid and it takes out these highs, you know, essentially what's happened is all these guys who've been shorting this and are holding the shorts have very, very little reason to cover here, right? You see the pressure is still on, so absolutely no reason to cover into these lows. So, and a lot of people are likely adding, trying to go for the break. So because it looks heavy, it looks like the level keeps on being tested, it's making lower lows, and ultimately it's going to break. So the market is most likely piling into these shorts. The shorts haven't really had any reason to cover, and they're trying to play for that break. So if this starts to grind higher and starts to take out all stops that are trailing, catches some buy stops, don't be surprised to see this pop 100, 200 pips very, very quickly back into that 200 and possibly back into mid, right? So interesting level to keep an eye out for. And another one I think a lot of people are looking at. Actually, before, look at this. I just noticed this the other day. It's probably going to tick a lot of people off, but I have no uh, no skin in the game here. I'm just talking. I just want to show something this because it's quite interesting, right? I know people are gonna feel bad about this because it caught a lot of people off guard. But look at the magic of price here. Look at Euro CHF. The end of the world puke that takes out these lows, and slowly but steadily, you know, we're pretty much made it all the way back to the infamous day, right? It's quite impressive if you think about it. Again, I have no position long or short. I have no axe to grind, but quite impressive actually if you think if you lived through this and you read all the commentary. Quite impressive that that's pretty much back to unchanged. And USD CAD. Just as a reminder that, you know, why I always say stranger things have happened, you know, anything can happen. You can't if you've been doing this enough, you know that nothing should really surprise you. The other interesting one is this dollar CAD, right? We've been talking about this for a long time, right? And essentially these 128s are really, really key. So watch out, right? You see how it's basically just stuck here? If this level goes and it gets a little bit of traction, you would expect this to accelerate all the way back into these 25s, 24s quite quickly. However, right, this candle, no matter how aggressive it is, you know, it's not a healthy candle. What that means is you can't play expecting to see this go in a straight line back there. So just be very, very careful coming into the today, shorting this heavy simply because you saw this candle, because this might give back a lot, stop you out, and then go to final target. Remember, you always want to play and look for the market to behave in a healthy manner. Of course, you can make money when it behaves in an unhealthy manner, but you can also lose an awful lot of money. And we prefer to focus on how the market behaves 80% of the time rather than how it behaves 20% of the time. So if you think you're going to get 3 candles like this in a row to clip this, go back on the chart and find 3 candles like that in a row, up or down. You'll see it doesn't happen very often. So you want to play for what happens the majority of the time, not what happens the minority of the time. Having said that, still stuck in range until it breaks. Below, very, very heavy. Inside, you could easily see a nice little bounce back into the pivotal level. So unless that breaks, effectively, you're still stuck inside the range. 128 is still going to be the pivotal level, right? Just don't be a pig. And you know, that's pretty much it. So again, if you have anything you want me to cover, some charts you want me to post here on the Twitter stream, just give me a shout out. I'm more than happy to try and accommodate. Have an awesome week. Again, watch out. Probably be very, very volatile, very, very whippy. It's all about follow through, which we ain't really getting. So let's see if we get some. Have an awesome one. Thank you so much for following. Thank you so much for sharing. Thank you for liking. Talk to you guys soon. Bye-bye.